Hello traders, welcome to another video about gold. Today is Sunday, July 2nd. It's a little before midnight. It's 11:45 p.m. Now, the Fed and the ECB increasingly assertive remarks took flight. Both of them were hawkish, causing gold to swoop downward, breaching the 1900 handle and print low of 1893, only to soar back up to a closing of 1919 by the end of the week. I recommended a trade in my last video to go long at around the 1900. If you did this, congratulations. Below is the updated interest rates probability from last week's report or video. We were at 70%, 74. Now we jump to 85 for a rate hike in July, 89 in September, 92 in November, and 86 in December. From a deep-rooted standpoint, I have an unwavering conviction that gold is poised to face intense scrutiny, and an inevitable plunge lies on the horizon. From a technical analysis perspective, gold now in no man's land. Immediate support at the 20 days moving average, now at 1936. And this should limit any upside attempts, maybe. The moving average, the 100 days moving average at 1945 and the 50 days moving average at 1968. The 20 days moving average crossed the 100 days moving average from above, and this should be bearish if gold stays below the 100 days moving average. Now, see this descending trend line. So far it's respecting it, and this could offer like selling opportunities at it or above it a little bit for a retest of the 1900 handle. From a technical standpoint, brace yourself for an exciting roller coaster ride as further weakness looms on the horizon, ready to unleash its fury. Last week, the mighty fortress of psychological support at 1900 was put to test and ultimately shattered, paving the way for even more thrilling twists and turns. Maybe, who knows. Looking at support and resistances, for the daily Bollinger Bands, the upper band at 1975 and the lower at 1897. I think the 1897, 1893, this should limit any downside for now. We have the Fed meeting, the Fed decision on the 26th of July, and another CPI reading, I think. We will see. These are the resistances at 1936, 1945, and 1968. The Fibonacci retracement at 1902. Quick note about the Bollinger Bands, because I got this question from someone. These numbers are dynamic. When now it's 1975, the upper band, and 1897, the lower band. Tomorrow this is going to change, and after 6 hours this is going to change. As long as there are price action, this is dynamic figures. It's not like line in the sand or a trend support line or something. No, this is moving. I believe that gold might be heading towards 1800 sooner than later. Why am I saying this? Because we could see another 4 rate hikes by year end. I know this is unlikely, but who knows what the inflation figures would read. So we are having a higher interest rates environment. This would definitely support the USD and would put pressure on gold. Now the gold cannot cross the 100 days moving average, so it's bearish. How far it will go, I don't know, of course, but time will tell. For next week's calendar, on Wednesday, the Fed's minutes, and then on Thursday, the JOLT report. On Wednesday, we have the EDP report. I forgot to put it here. JOLT report, the job openings and labor turnover surveys, the job openings and quits. And Friday, we have the NFP, which is going to be highly watched by the market and the Fed to try to get a clue about the Fed's next move. For JOLT, this data is used to analyze the retention rate of the industry, business cycles, as well as the economic research that's specific to a particular industry. Strong jobs data will give the Fed more reasons to stay hawkish as it dampens the odds of a recession, which will likely lead to tighter approach aimed at controlling inflation by raising interest rates or reducing monetary stimulus. And this would, as I said, will support the USD and puts more pressure on gold. Expect an electrifying week, a lot of volatility. Monday kicks off with the probably light range trading and a hint of volatility preceding the holiday on Tuesday, the 4th of July. And leading up to the highly anticipated release of the Fed's minutes, the rest of the week promises a flurry of captivating economic events. This is the next week calendar. On Tuesday, United States is off because Independence Day. And the Fed minutes on Wednesday at 2 p.m. Eastern Time. JOLTS on Thursday at 10 a.m. ADP also on Thursday. I said Wednesday. Sorry about that. It's on Thursday. And then the non-farm payroll on the first Friday of every month, as usual, at 8:30 a.m. Good luck, everyone, and have a good day.